Hey everyone, Jay Cottrell here with eXp Realty here in the Tri-Cities, and it's time for the monthly market update. So I'll give you information on our local market here in the Tri-Cities. We're going to look at our year to date here so far through the end of October. And for those of you with a short attention span, I'm going to go ahead and bottom line it for you. And then the rest of you can stay tuned to actually look at the data. So, what is the bottom line? Well, one, mortgage rates are down. And what happened when mortgage rates went down? Well, mortgage applications went up and pending sales went up. See, our inventory is now near 2020 pre-pandemic or 2020 levels. Sales are near 2017, 2018 pre-pandemic levels. Pending sales slightly increased over the month of September. Time on market is slightly longer than it was this time last year. However, sales prices remain strong as they are still up 11% from last year. So that's the quick and short summary for those of you with the short attention span. Now, what do you say we go ahead and take a deep dive into the data? All right, so let's start out with a quick update on mortgage rates. So I just pulled this data from this morning from Mortgage News Daily. This is their composite index of where mortgage rates are at currently. You can see the 30-year fixed is at 7.37%, which is pretty pretty good, pretty amount down from the peak at 8.03%. Don't forget that peak was just over a month and a half ago. We look at, just to give you an idea, just in one short month, we've gone from 7.92% to 7.37% on a 30-year fixed, 7.2 to 6.75 on a 15-year fix. And if you're interested, you can look over the whole, you can pause this video and look over the whole chart if you want. But this is where this is where perspective matters. Because if we look at just over the last 5 years, it does not look great. You can see that as mortgage rates went down, now they're started climbing back up faster than they went down. However, let's look at the last few decades. So if we go all the way back to 1980, you can see that since about 1982, where rates were up over 15%, close to 20%, they have been on a steady decline decade after decade after decade after decade. So that had to change at some point in time. They can't just keep going down to zero. That market just had to change. And so really what we're looking at right now is sort of a correction of mortgage rates that takes us back to the mid to late 90s, early 2000s, to where mortgage rates were during that time. So again, this is why perspective matters, because if you look at it in the short term, yes, they've gone up, and it definitely hurts how fast they went up. But as an overall perspective, they are still relatively low over the last 40 to 50 years. Now, here's something that interesting. So as those rates went down, like I said, applications went up, and purchase and refinance applications increased to the highest weekly pace in the last 5 weeks, because during that time rates started dropping. Now, I want you to take notice of this, because as rates continue to drop, those applications are going to pick up and the pending sales are going to pick up. So you hear me say this several times recently, and you're going to hear me say it several times in this video. If you are a buyer waiting on the rates to drop before you purchase, you are not alone. And if you continue to wait, you are going to be there's going to be a lot of competition for homes when you finally do decide to get out there and buy. So why not get ahead of the competition instead of waiting on the competition? Because I could foresee a time that if mortgage rates continue to drop below 7% and start getting closer to 6%, we could start seeing those multiple offer scenarios hit every listing again. So again, that's still happening on some really nice, really well-to-do listings. Well-to-do, but I meant that's not what I mean by that. But really nice move-in ready listings. But they're getting fewer and further between. Well, as rates continue to drop and more buyers come out looking to buy, we're going to see those scenarios come back again. So you can see, even though they're still challenge, even though these rates are still challenging for a lot of home buyers, you have starting to see those applications and pending sales pick up. And but this, I found this interesting. So the purchase activity for newly constructed homes is up almost 40%. And what I think has started happening is, because home prices have continued to increase and the prices of many of the materials to build homes has decreased, I think you're starting to seeing a leveling off of the prices between um, newly constructed homes and resale homes, to where newly constructed might be, might be a little bit better bargain, or at least close enough that you say, I would rather buy something brand new than spend what I'm going to spend on something that's not brand new. So that's my take on what might be happening there. But also, builders have been trying to ramp up the building of new homes, simply because we are in such an inventory shortage, and we have decades and decades of not enough homes being built. Now let's go ahead and look at the real estate market. So if we take a look at the active listing count, you can see that we're trending above 2021 and 2022, and we've just started trending above 2020, but we're still nowhere near where we were in 2019, which was actually a little bit less than 2018, and nowhere near what would be considered a balanced market of 5 to 6 months of inventory, which you can see by that red line. So we've still got a lot of room to go if we want to get towards balanced market conditions. So we are still, even though inventory has been creeping up, we are still in a seller's market where there are more homes on the market for sale, or sorry, more buyers out looking for homes than there are homes on the market that they want to purchase. Now, if we go ahead and look at sold listings, you can see that has probably been the biggest correction factor this year. You can see that number is trending well below 2019, and definitely not where we were in the craziness of 2022 and 2021. That's closer to the 2018, 2017 levels, which was also pretty good years for real estate. So again, it's just sort of correcting back to what I would call normal. The pendulum is having to swing back, just because we ran out of homes to sell, and now with these interest rates, we're running out of people that want to sell their homes. The pending listings did creep up this month compared to last month, though the overall trend has been down from previous years, really towards the 2019 levels. Now, again, interest rates started dropping for mortgages, and we saw over the past few weeks on a week to week basis of the month of November, pendings jump up as that rate went down. So, my suspicion is that sales will be up in the month of November and December compared to previous months, and pendings will be up as well. So again, if you want to get a jump on buyers in this market and get your home purchased before um, other buyers get out on the market searching for homes, then we need to chat, because you need to get started. We have a pretty good inventory of homes to choose from right now. And as the old adage goes, the best time to purchase real estate was yesterday. The next best time is today, and the worst time is tomorrow. Because I do see, as those rates continue to hold steady or drop, you're going to see more buyers coming out looking for homes. The number of new listings has kind of gone back to normal as well, closer to the 2021 levels, 2022 levels, still below 2019 and pre-pandemic. But again, as we've talked about, with those higher interest rates, that there were a lot of people that just didn't want to sell their homes, because they didn't want to trade in that 2.5% mortgage rate for something much higher, to where they wouldn't even be able to get much to really get the house that they have for the same payment that they have. So that's not surprising. We'll keep an eye on that. But as of right now, the number of new listings on the market has slowed back down to closer to a normal pace. But you can see there's not a whole lot of difference in these numbers throughout the years. And the trends definitely seem um, to stay pretty consistent. Well, once we get through the new year, you'll start to see January and February, that number of new listings coming on the market for sale picking up again. the average sales price. So this is where I keep trying to tell people prices are not quit reading the headlines, quit listening to I hate to say fake news, but quit listening to the news headlines. Home prices have never declined in our area. You can see we're up 67% from 2019 and up 11% from this time last year. So we have not seen that decline in home prices that you heard about throughout the news media, especially over the summer. You can see that we had 1 month, the month of May, where the average sales price was below the month of the previous year. That was the only month that quickly corrected, and we have gone back to staying with an average sales price higher than last year, which is much higher than the year before and way higher than 4 years ago. We look at monthly home price appreciation. So this is where I track where the median is moving. How is that whole bell curve moving and shifting? You can see that the median price for October is up 11.8% from last October, and again May we saw that go down to 1.5%. But other than that, most of the months of this year have seen double-digit price appreciation when you compare them to that same month last year. So prices have not gone down. They don't look like they're going down anytime soon. I believe it would really take some sort of economic catastrophe, which none of us want to experience, for home prices to go down. So quit waiting on home prices to go down. They are not going to go down anytime soon. Okay, let's get a little more granular look at our market. So if you look at this graph, this spreadsheet. So the overall market for October is the top line. So these are the numbers that you've seen before, but let's look at a percentage basis. So you can see October, the number of active listings was up 14% from the previous October. Year to date, though, we're still trending down about 3.7%. So that means that year to date, we have fewer homes on the market listed for sale than we did last year. Pending sales are up 6.6% for the month, down 9.1% year to date. Sold down 13% for the month, down 15.1% year to date. With sales price, the median sales price is up 11.8% for the month and up 10.8% for year to date, with the days on market up just a small 6.2% and 6.3%. Now, if we go ahead and look at Johnson City, Kingsport, and Bristol, I'll let you look at these and see what numbers are interested to you, but I just want to point out a couple things. Some of the bigger movers. So you can see Johnson City had a pretty big jump in pending sales last month, but it's still almost 8% below where we were year to date last year. And Johnson City definitely has the highest monthly price appreciation, but the lowest year-to-date price appreciation. So year-to-date prices are just up slightly in Johnson City from where they were last year, just almost 1% at point zero, or not really 1%, but almost a tenth of a percent. So prices have remain pretty steady in Johnson City, while Kingsport saw a pretty big bump at 12.3% for the month, or 15.4% year to date. But if we go all the way to the left, let's look at the active listing count. So Kingsport had 93% more listings in October than it did last October. That's a pretty significant jump when it's trending year to date. Is the only one of the three that year to date also has an increase in active inventory of 3.5%, and also has the highest price appreciation year to date at 15.4%. While Bristol seems to have the longest days on market. So what you can see is overall, each city is trending about the same as the market as far as the overall direction, but there are some pretty significant difference when you actually look at the numbers with Kingsport leading the pack on number of number of listings year to date compared to the previous year, while Johnson City seems to have the uptick, the upper hand in the amount of sales. Though Kingsport's not far off. Those numbers are pretty similar to each other. But as you can see, sales price is up pretty much across the board. And though the year to date is only up in Johnson City 0.07%, for the month of October, it was up 17.6%. So that number is probably going to move. The year to date is probably going to move higher as we get closer to year end here. So that's a little more granular look. All right, that's it. I tried not to make this really long, but I did want to get the information to you without a whole lot of extra talk from me. So I really appreciate you watching this video. Thank you for staying tuned. As always, if you like these videos, please like them. Please subscribe to my YouTube channel and my Facebook page. Please share them with anyone you know that's thinking about selling, or thinking about buying a home, or thinking about moving into our area, so they can get the most on the ground local market information that they can. And as always, please introduce me to them so that I can sit down with them and see if I would be a good fit for helping them with whatever their real estate needs are. So that's it for this month. We'll see you next month.